What's going on, Middle Georgia Real Estate? I wanted to hop on here real quick and talk about interest rates because over the last few weeks, everything's fallen apart. Just messing with you. I want to keep you updated and educated on the market so you can feel comfortable and confident when either buying or selling a home. So let's just get started. Hopefully, we can make some sense of what's going on in the economy. So, will mortgage rates keep rising? Let's find out. When the economic uncertainty dust settles, those buyers and sellers who are on the sideline will jump back in the housing game. Demographic trends support elevated purchase demand in the years to come. So, it's a question of when, not if, for the housing market. Mark Fleming's talking about over at First American. So, this coincides with what's going on. We see all of this stuff in the news, falling interest rates, taking a plunge. It's going to hit the floor. Market listens, the Fed speaks, crash, all of this noise going on. But in times of uncertainty, people follow the certain. I want to make sure that you're confident and comfortable with all the information that I'm giving you so you know what to do during these times, because we're seeing news headlines like this, right? The U.S. housing market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach highest level since 2008. And then 30-year fixed rate mortgage jumps over 7%. It instills a lot of fear in buyers. We're just seeing these little clips of news headlines, and I want to make sure that you know what's going on. So we can look back to January 1st, or just the beginning of January, 3.22% interest. Just last week, we're seeing 6.7%. Big jump. And the reason is what I'm about to get into on these next couple of slides, because just a few weeks ago we were seeing in the 5% and nobody thought it was supposed to jump higher, and things change. So the uncertainty and volatility of the financial markets is heavily impacting mortgage rates. Again, the uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year. So as you take a look at the bottom of the screen, this is just primary mortgage market survey on what it looks like picking different types of mortgages where we're sitting right now. So I know I repeat the uncertainty and volatility in financial markets is heavily impacting mortgage rates. It's our economy. Our economy is not stable. We spent too much money. We printed too much money. And now these effects are happening because we made bad decisions in our country at that level. But over at First American, they say the aim of Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. So the Feds don't get to choose what mortgage rates are, but to combat inflation, they want to slow down the U.S. economy. They want people to start spending less money. And how do they do that? But mortgage rates up. The U.S. housing market is one of the biggest financial economies in our nation. If we stop buying homes, a lot less money gets put into circulation. But to finish this quote off, home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability, and annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July, and it's still going down. So what they're doing is working to be able to help fight inflation. Just depends on how quick we're going to get there. So from realtor.com, they're saying, while even 2 months ago, rates above 7% may have seemed unthinkable, at the current pace, we can expect rates to surpass that level in the next 3 months. So I started this off and I just wrote a blog post about it. Is it a good idea to wait to buy for mortgage rates to go down? Experts didn't think rates were going to get this high. And now they're coming out, senior economists, saying that rates are still going to trickle up. We're already at 7%. So it's only going to go up from 7%. So if you are currently thinking about buying a house, it may be a good time to jump on it now and refinance down the road, because we don't know how much higher it's going to get. But again, another quote from realtor.com, there is no doubt that the increasing mortgage rate will make home buying even more challenging. Something called purchase power. Wrote some blog posts on it last week, and I actually posted on my Facebook story and Instagram story today what your purchasing power looks like. So if you want to go hop on there, I'll show you. I'll also throw it in this group later today. Put a blog post in there about that. It's just how much home can you actually afford? Because $1,200 a month earlier in the year does not get you what $1,200 a month today looks like, even with renting. Because the thing is, with renting homes, some investor is paying that mortgage for you and they're going to upcharge you. So the cost of rent versus buying, renting can be very expensive. Very, very expensive. So to finish this off, buyers may still find opportunities as these changes coincide with the time of the year when buyers have historically found the best market conditions to obtain more bargaining power. So this part of the year that we're in, late summer going into early winter, is the best time historically buyers have had in the past to negotiate the best offer for their home. So it's not like we're just out as buyers. We historically have good bargaining power during this time of the year. So we are evening out, and it might be a good time for you to purchase a home. And to finish this off, Mark Fleming says, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. Nationally, while month-over-month house prices may decline, annual house price declines are not expected. Given the ongoing supply, demand imbalance, and continued strength in the labor market. So, to sum this up, the high spike in interest rates are most likely behind us. Home prices are not going to depreciate. They're still going to trickle up, just not as fast as they did in the past. So if you're looking to buy or sell a house, and you want more information on interest rates and everything like that, please get a hold of me. I work with the best loan officers in the industry. And we can show you exactly what your monthly payment would look like to see if it would even make sense right now financially to purchase a house. And right now, the best way to purchase a house is to put your home on the market. Make sure that you look for a new house over the course of 2 weeks, put an offer in on your new home, make a contingent on your home selling. We get that home sold, and you can have a nice transition into your new home. So if you need any help with that process, please let me know. Again, my name's Luke, Middle Georgia Real Estate. See you later.